We're at the GAIM Hedge Fund Conference in Boca Raton, Florida. With me is activist investor Phil Goldstein of Bulldog Investors. You're a co-founder there as well as principal. Good to see you in Florida.
Thank you. It's nice to be here.
Weather's much better than in New York right now.
A lot better.
So I think one interesting approach when you talk about activist investing is you sort of have a fun job, right? Because a lot of people think to themselves, I wish that company did something different. But you can actually affect change. And I want to actually give an example of a company in which you're involved, Imperial Holdings. It's a company the FBI raided.
That's right. It raided the company in September of 2011, and apparently the allegation was that they had aided and abetted applicants to fabricate answers on their applications for life insurance. But since that time, they've signed a non-prosecution agreement, so that's pretty much ancient history, although the company's still suffering from it.
But I would think most people see that and run away. You jump in and say, okay, I can affect some change here. Right.
Well, yeah, I mean, you have to do a little analysis, but yeah, people tend to panic and they say, I don't want the headline risk, but at the time, the book value was over $9. The stock fell from around $7 to about $1.60. But the most important factor was that we knew the CEO, and we thought he was a guy of integrity, and we started to scratch the surface and called him and found out that this company could be salvaged, and continued. We started to acquire stock, and we've done well on our investment. It's over $4 a share. The last I looked, we started buying around the $1.60, $1.70, but we think there's a long way to go on the upside, but there are risks.
How does that company sort of epitomize your strategy and your approach to activist investing?
Well, it doesn't really epitomize it. It's pretty. It's really an outlier, because normally we're not turnaround guys. We come in and we see the value, and we're pushing for a sale, a liquidation, a special dividend, that type of thing. In other words, we're looking for companies that are not properly deploying capital. This was really an exception, but I think our activist experience, and our creativity allowed us to see this as an opportunity where we could be effective, and now we have a couple of seats on the board, and in fact, I'm the chairman, and I think God willing, I think it's gonna work out, but there are risks.
Such as?
Well, this is a company that has their primary assets they have life insurance policies with more than $1 billion in death benefits, and that sounds great. I mean, the whole market cap of the company is probably $50 million. Mm. The problem is they need to keep paying the premiums until, I don't know, you can use whatever euphemism you want, but until you start getting some deaths. So it's an asset that needs to be fed. And when the feds came in, the bank cut off their financing ability. So the most important problem the company has to solve right now is to be able to assure itself financing so it can continue to pay the premiums until it becomes cash flow positive, and that's what our #1 goal is.
Are there more opportunities? Are you finding more opportunities now or less?
I think there's more, partially because of the financial crisis, and I think it's also easier for us to rally support among shareholders who become disillusioned. When things were going well in the mid-2000s, shareholders would tend to support management. I think they've become a lot more skeptical, having lost a lot of money by trusting in managements.
So when you are looking for opportunities, are you sort of an equal opportunity kind of guy? You don't rule anything out, or are there some areas that you're just not comfortable going into?
Well, I don't think we want to get outside of our area of expertise. I'm not claiming that I can run a business. I can't tell. Actually, a guy once asked me, he said, well, I was explaining why Cisco Systems was cheap, and he said, well, are you saying that you could come in and run the company better? I said, no, but they're not deploying their capital properly. If they're sitting with $60 billion in cash, I don't think you need to be an expert in computers to know that that's earning nothing, and maybe it'd be better off being returned to shareholders. So we're generally looking for almost the obvious, what everybody sees, but we're willing to get our hands dirty and push management to do the right thing.
And aren't there a lot of companies with a lot of cash?
There
They've
are.
got piles of cash.
There
I
are.
keep hearing that.
Yeah.
So you're going to be a busy guy all year.
I don't think we're going to be bored.
What is the reluctance in terms of the deploying capital? Do you think companies really are as scared as some of the headlines make it out to be? You know, no confidence CEOs are just hoarding this and they're worried about this, that, and the other thing from Washington, or is it something else?
Yeah, I think it's probably the concern about what's coming next from Washington, regulatory issues. Look, small companies especially find it very, very hard to get financing. The larger companies, though, like in Cisco, they really don't have a problem. So there's really this bifurcated credit system. But small companies are hoarding cash, and maybe properly so, because they're concerned that if a crisis comes, they won't have it. But you know, earning nothing is not a great use of capital.
Now, tell me about the name Bulldog. Does that define your style when you go in and try to affect some change?
It's well. First of all, if you think about it, this is not a pit bull; it's a bulldog. A bulldog's friendly, good with kids, right? But it's tenacious. So I think that does define us. We're nice guys, you know. We don't go in with guns blazing, writing attacking letters right off the bat. We take a graduated approach, but we are tenacious like a bulldog. You don't want to try to take the bone away.
And tell me a little bit about your track record.
Well, we just finished our 20th year in business, and I think our net annualized return is probably about 12.7, 12.8% net to investors, and we've had one down year. So I think that pretty much supports that this type of investing can produce real alpha, unleveraged. I mean, you don't really need leverage to get outperformance, and with less volatility than the market. So, you know, some people say that's the holy grail, but it's hard work.
So what's the difficulty in it? Is it analyzing the numbers? Is it trying to push the change? Is it knowing you've got to make personnel changes? Where's the difficulty in it?
Well, it's both, but probably the second. Pushing changes can often mean disruption, and the people who run public companies tend to look at it as it's their company, and the shareholders are they're not really there to do anything except pay their salaries and their perks. So when you ring the bell, you know, when you ring them up on the phone, and you go in and you say, well, look, your company's selling way below its intrinsic value in a sale. The stock's worth 30, it's trading for 20. It's very rare that the response is, hey, you know, we never thought of that. You know, that's a great idea. We're gonna shop the company, you know, because that puts them out of a job. So you know, that's the hard part.
Yeah. Now, when you first look at a company and think about acquiring the stock, do you let them know before you have to actually file when you've got a holding?
Sometimes we will go up to the 4.9% level and say, look, we're going to be making a filing. We'd like you to do something proactive. And sometimes managements will negotiate, and more frequently, I think because of us, because we've had a good track record, they know that we're bulldogs. So we've had a pretty good success rate at negotiating something to enhance shareholder value without having to go to the mat. But sometimes you don't.
Yeah, you look like you have fun doing it.
I'm having fun now, but sometimes it's not fun, especially when you get hit with a lawsuit.
Oh, that will be a conversation for another day. Phil Goldstein, great to talk to you. Thanks so much.
Thanks for having me.
I'm Rhonda Schaffler. This is Reuters.